that. And with that, let's just remind all our viewers that tomorrow is the 1st of January. Apart from being a new year, it is also the 1st of the next month, which means that December auto sales data will start trickling in. So let's go across to Sonia to get a curtain raiser going. Though, Sonia, I don't know how many companies will actually, release those numbers tomorrow.
I was going to start by saying, most companies do not release their numbers on the 1st of January since they are shut. But nevertheless, we have estimates for you, and this time it's going to be a good set of wholesale dispatch numbers, especially for the passenger vehicle space. So we've done a poll of 3 to 4 brokerages, and here's what we've picked up. On Maruti, we are expecting a growth of around 12.5% year on year, the domestic growth that is. It'll come through at 150,000 units. In fact, passenger vehicles on the whole will look quite good. So even M&M's auto space will see about a 2.5% growth on a year-on-year basis. Tractors will be the best performers this time around yet again. So M&M tractors will grow 26.9%, while Escorts tractors will grow about 21% year on year. In the two-wheeler space, it's actually, largely a single-digit growth for the large players. So for Bajaj Auto, a 5% growth is what we're looking at. For Hero MotoCorp, about a 7 to 8% growth. TVS Motor will do quite well, 18% growth over there. And Royal Enfield, because of the base effect, there'll be about a 25% growth for Eicher Motors. The commercial vehicle space still has some time to recover, so it'll be the worst performing of the lot. Ashok Leyland, we're expecting just a 0.5% growth to come through. Eicher Motors commercial vehicle, a degrowth of 10% is what we're looking at. Tata Motors will be about a 12.5% growth in its commercial vehicle business. But like I said, the star performers this time will be the tractor makers. We're expecting in excess of 25% growth. So all in all, the month of December is expected to be quite good, A, because of a low base, and B, because the festive demand has continued into the month of December. Back to you guys.
Okay, Sonia, thanks very much for that. So that's how the numbers are stacking up with respect to at least the expectations. Well, on that note, let's welcome in Vinay Khattar, Head of Research at Edelweiss Wealth Management. He's with us on this leg of the show. Vinay, thank you for joining in. Season's greetings and Happy New Year, first of all, to you, colleagues, your team, your family, and everyone at Edelweiss.
Thank you so much, Surbhi, and same to everybody at CNBC and to your viewers.
Thank you very much. Vinay, we do have to talk about the overall market. But before that, since Sonia was anyway mentioning autos, and I know this is something that you've been looking at very, very closely, just want to start by getting your sense on the sector, this big recovery that we've seen, and whether the best of it is perhaps behind us, the COVID-related pent-up demand, festive season sales, whether that's over, and what should we expect in the auto sector and ancillaries in 2021?
So, 2 or 3 things which are very, very important, Surbhi, as far as the auto sector is concerned. One, our sense is that we are beginning to see an uptick in the demand cycle per se. So this is not going to be a short-term affair, this is going to be a longer-drawn one. But having said that, we must look at the bull in the shop, which is right now what is happening on the electric vehicle space. So when you pick stocks in auto and auto OEM side, you'll have to remain cautious not to end up buying something which could get seriously impacted because of the electric vehicle. Now, if I were to just take your viewers to what's happening on the electric vehicle side, predominantly China has become a major power on the lithium-ion battery. Last year, 2.2 million electric vehicles were sold, out of which 50% were sold in China. A significant section of Tesla's revenues came out of China, again through electric vehicles. Now, we all know that price of battery has been crashing. It's crashed by almost 10 times in last 10 years. Now, the big challenge is that if you have to put large-scale battery capacities, only then you kind of make some money. The break-even costs are relatively high. You need at least a 4 gigawatt capacity to break even on the battery side. Now, those kind of capacities are happening right now significantly in China, with they are the market leaders. The technology has become significantly commoditized, where large production capacities are coming in. So it is going to go the photovoltaic cell route, wherein the solar energy, the solar panels predominantly were made out of China for meeting the entire global demand, and most of the companies which were present in others in the photovoltaic cell space globally went bankrupt. Is that a scenario that could play out? Possibly, yes. Second big thing from electric vehicle side is the battery management system. Given that BMS controls how the cells are going to draw energy, the thermal management of the pack. It's kind of the head and heart of the electric vehicle of the future. Now, my sense is, why would somebody like a Tesla or a Volkswagen allow the BMS to be resident outside the OEM? Tesla, of course, controls the entire BMS pack in its own company. I think most of the other OEMs will go in the same direction, which means the battery players in a country like India and a lot of other parts of the world will get increasingly challenged in terms of their survival because of the EV onslaught. A similar thing could play out on the IC engine side, where the IC engine is going to go completely obsolete. So, beyond electric vehicles, there are segments and there are auto ancillaries that you could look at. The CV is one space that we really like.
Okay.
In that segment.
Vinay, good afternoon. Thanks for joining us. So, CV is in fact something I was coming to, because Ashok Leyland has now once again gone back to perhaps its historical high valuation without the cycle fully turning yet. But tell us, I believe you like this stock, so tell us the thesis for this investment.
So, if you look at the entire CV space, what has happened is in 2018, post the government came out with the revised Excel norms, the entire sector went into a tailspin. We saw volume additions drop significantly, even the freight, the tonnage addition dropped, and then India went into a kind of a slowdown as far as the economy was concerned. MHCV segment took the maximum brunt of it. Now, as far as the data is concerned, in our channel checks with the OEMs and with the freight companies shows that there is a very significant robust demand uptick. As the demand goes up, the freight utilization, which is currently close to 70-72%, is likely to go up to 80%. And at that level, the new demand for CV begins to kick in. So those factors become extremely profound for the CV demand overall to come in. And that, to my mind, will further get accentuated with the level of e-commerce play and the GST introduction, and all those benefits begin to come in, where the logistics sector itself begins to do very, very well. So CV is one play that we really like, and Ashok Leyland, of course, remains our top pick. As far as the valuations are concerned, the way we see it is that from bottom to top, these companies can generate anything like 4 to 5 times return. I think we are still at a very, very early stage in cycle. So 70, 80, 90% kind of returns that you have seen. Probably there are going to be a lot more legs over the next couple of years for the numbers to go higher and valuations to go higher.
Okay. So, Vinay, just to round up the auto part of the conversation, I mean, I know you like some of the ancillary stocks as well, like I think Jamna Auto or GNA Axles as well. So what are you looking for over here? Because there's a lot of excitement again around this whole PLI thing, which will roll out. We'll have more details in the weeks and months ahead. But what should one keep their eye on?
So auto is almost 40-50% of the entire manufacturing GDP in India. That's the biggest contributor. And within that space, as I said earlier, the auto ancillary forms a very significant part. Now, a player like Jamna, which is again fairly cyclical given its correlation with the CV cycle, becomes a very dominant beneficiary when the cycle begins to turn in. It's into fairly basic products. Most of the sales are to OEM. And post GST, one of our hypotheses earlier was that once the GST settles down, a lot of secondary market sales could come in. That could cause significant growth in both top line and operating leverage playing out. So Jamna Auto could be a very big beneficiary from the entire CV uptick that's kind of playing out right now.
Okay, Vinay, that's on the autos. We need to take a quick break, but I have some questions for you from the larger market point of view as well. So we'll do that on the other side of this break. Welcome back. This is Closing Bell. We are in conversation with Vinay Khattar, Head of Research at Edelweiss Wealth Management. Vinay, we discussed auto sector, but let's talk about the market because it's been such a phenomenal year. And there's clearly a bit of a dichotomy here, right? The large caps are extremely overbought and expensive, while in the broader market you could still find some decent valuation. But you tell us, what should be the portfolio approach in 2021?
Very well said, Nikhil. You see a complete runaway kind of a situation, especially in last 2 months. If I would just give you some perspective, in last 2 months, more than 1.1 lakh crore of FII flows have happened. At the same time, the DII outflows has been just about 85,000 crore. Of course, there is a lot of retail money that is again added into this whole middle. So you find that there are reluctant sellers and there are aggressive buyers, which has caused market cap of India to jump up from $2 trillion to $2.5 trillion in just 60 odd days. I mean, that's one of a very, very rare phenomena. I mean, this kind of returns you probably saw last time being made was in around 2005, right, when India was just suddenly becoming the flavor of the entire global investors. So there has been a massive squeeze from the buyer's point of view. So market valuations have really jumped up. Having said that, are all the stocks at near their all-time high? That's not true. If you look at the BSE 500 or NSE 500, more than one-third of the companies are still 30 to 40% away from their all-time high. And you could get a lot of value there. There are stocks which are still 50-60% lower, spaces like sectors like retail, auto. There is a lot of value around stock picking which could emerge. And that's what the focus should be, to my mind, because first, by playing Nifty, the valuations have become pretty rich. Most of the returns, as far as the large caps are concerned, have got kind of front-ended. So you'll have to go stock-specific, bottoms-up kind of an approach for making money from this point forward.
Okay, got that. Vinay, thank you very much for sparing the time and for being with us on this afternoon, the last day of 2020. You have a fabulous end of the year and an even better 2021.
Thank you so much.
All right, on that note, we're going to take a very quick break, come back and close down the last trading session of the year.